Hi everyone, Joe Kehrig, managing broker of Coldwell Banker Real Estate in Danville, and this is your San Ramon Valley real estate update for the week of July 20th. This week I want to dive right into the graphs because I want to talk to you a little bit about, because I'm getting asked so many times, where do I think the market's going with the election and everything else? Well, let's look at the first graph and let's talk about it a little bit. The San Ramon, you can see that the pendings went down a little bit. The active properties stayed pretty consistent. But even though, when you read these graphs, even though you see that the pending sales are currently 137 and last week they were 140, you have to look at the sold sales. And when you see 28 properties closed, that means that literally there were 25 pending sales just last week in San Ramon. And as we always talk about, wherever I go in the United States, just show me the actives and the pendings, and I'll show you where the market's going. And what we've seen the last couple months, as I've been doing these, is it almost inverted, where you had the pending sales here and then the active properties here. Now it's completely gone this way. This is somewhat of a normal market. This is basically leaning towards a seller's market, and you'll see that. So, but still very, very strong market in San Ramon. Would I be a seller in this market? Absolutely. The prices have never been higher than they are right now. We have not only made up everything. February, remember, was the best February in 13 years. And we've made all that up plus some. And we'll talk after we look at the graphs why that is. So let's look at Danville. And you can see Danville, wow, look at the pending sales went from 129 to 140. Then when you add 22 sold properties, properties that closed last week, you literally have 11 properties plus 22, 33 properties went pending last week. Now, let me tell you why that's so important. Again, you can see that inverted where the pending sales outpace the sellers, the active properties. And let me tell you why that's important. Look at 33 pending sales last week and look at the pendings, only 92 pendings. Now, if you want to figure out how long the market is, like days on market, you look at basically let's say the supply of what's out there. You look at 33 properties go pending and there's 92 homes on the market. That means that we have a 3-week supply of homes. That's the way they figure it out in Danville. A normal market, anything less than 5 months is considered a seller's market. And we've got 3 weeks where we have 33 homes went pending and only 90 on the market. And you can see pending sales are way up, active properties are down. Hopefully, as we get into the year a little bit, it will balance out. This is fairly indicative of what would normally happen in February, March, April, our strongest spring market. But always when we hit June and July, we saw more inventory come on the market and it would always level it out. Well, as we've been talking about for weeks, June 1st was kind of our March. All the real estate market did was just pause. So now we're basically in our spring market. So normally if you count, 3 to 4 months of a spring market, then October, November, we should see more homes come on the market. That would be our summer market. But you're not going to see that because there's not a lot of people that list their home during October, November, and December. And that's why when we hit February and the buyers come out, why the market's so strong, because there's a lot of buyers and not much inventory because people don't put their home on the market during the holidays. Plus, don't forget we're going into an election. All you have to do is turn on the TV and see that. And it's just going to get nastier and nastier. And there's so much uncertainty because the two parties are so far apart. There's so much uncertainty, and that's what pulls people back, where people go, hey, I'm not sure. I want to see what happens before I make a move. So I anticipate not the supply going up in, when we hit October, November, but maybe the buyers backing off a little bit because of the uncertainty. Interest rates are going to stay low, so that's not going to be an issue at all. Now let's look at the Blackhawk market. And you'll see, now the Blackhawk market, remember we talked about, was somewhat of a normal market where the pendings were here and the active properties were here. Now looks what happened. The pending sales jumped up to 23. Active properties went all the way down to 23. And we had 3 closings. So basically from 18 to 23, we had 8 closings in Blackhawk, or 8 pendings in Blackhawk, which was huge. And going into 24 properties on the market, again, we're looking at a 3-week, less than a month supply of homes. Now, obviously, when they figure those things out, more inventory is going to come on the market. And a lot of these homes that are active won't sell. Because if you're still staying on the market right now, chances are you're overpriced, or the home isn't attractive for whatever reason, if it's been on the market for 2 or 3 months. So either they'll pull off the market or they'll lower their price down. We are starting now to see, because the inventory is getting so low, what we're starting to see throughout the San Ramon Valley is homes that have been on the market 30, 40, 50, 60 days, now all of a sudden they're going pending, because there's not a whole lot of other to look at. Let's look at the Alamo market. Alamo market kind of balanced a little bit. We had pending sales go from 28 to 27 with 6 closings. That means just basically 5 properties went pending. You can see the active properties actually pumped up a little bit. So certainly the Alamo market is a strong market, but it's not the inverted where it's so much a seller's market. Having said that, we're seeing homes that basically were, in the 1.2, 1.3, go 200,000 to 300,000 when they're West Side Alamo. It's in such demand out there. The other thing that we're going to see is the average price is going to jump up in probably a few weeks, because one of Alamo's most expensive properties for $28 million just went pending. So again, that will kind of, I'm not sure what it's going to close at, but it will kind of change the numbers a little bit. Let's look at Dublin again. Dublin, the one thing about Dublin this week, I always said it was the only market where the average price was under $1 million. It just came over $1 million. So that market's getting stronger. You can see that the pendings went down a little bit, but again, 112 to 105, so that basically says there's, 7 less pendings, but you add in 26 closings. That means 19 homes went pending in Dublin. You can see that the active properties stayed pretty consistent, but again, it still is inverted, so it's definitely a seller's market. I mean, you talk about a seller's market, 105 pendings and 80, to active properties. It's just nuts out there. So again, let's look at the list price, sold price percentage, just like it's been before in the markets with a little bit lower price range. 100%. San Ramon, Danville 101, Dublin 101, and then the Blackhawk and Alamo, where the average prices are $2 million or more, you see a little bit more negotiating room in those prices. But so why is this happening? I mean, there's a number of reasons. One is, even though people are being displaced, the unemployment is still high. A lot of the unemployment is service-oriented people, and the problem, and unfortunately, in our area with it's hard even to get a single-family home for $1 million anymore. A lot of those people in the service industries aren't buying the $1 million, $1.5 million, $2 million homes. So a lot of the employment is not affecting our market. What's affecting our market is the low interest rates and what we talked about. I've heard figures anyplace from 1 to 3 million homes short in the United States of what we really need to take care of the demand. And in California, it's even worse, because it is so tough for the builders. Land is so expensive, and it's so tough for the builders to build. There's so many regulations that a lot of builders aren't building. So the inventory is basically not keeping up with the demand throughout the United States, but especially in California. So just look, month over month. So this is July 2nd from Zillow. So the pending sales month over month are up 18.8%. New listings taken are up 5.2%. The reason why is because obviously from June to July, we still started seeing homes come on the market, and the inventory was low when we were in shelter in place. But when you look at year over year, total listings are down, even though they're up 18% in July, June and July, they're still down year over year over 20%. And the new listings taken were down 16.6%. So low interest rate, no matter what's going on in a lot of parts of the United States, you know, where there's jobs, the real estate market will do well. And obviously, we're kind of in a bubble in the Bay Area. The job market's very strong, interest rates are very low, and the high demand, which creates the demand, and then when you look at the demand compared to the supply, is out of whack. That's what's driving the strong real estate market. So one other graph we'll look at, existing home prices year over year by region. You can see the overall in the U.S. it's 3.5, but go to the West, 5.5, the stronger. So prices are continuing to go up. And again, that's all because of supply and demand. I've always said you can drop me any place in the United States, just show me the active and the pendings, and I'll show you where the market's going. Well, what I've shown you is the pendings over the actives, and unless the absorption rate, the minute homes come on the market, they're going pending. So it's not giving the market a chance to catch up. Will that change in 2 to 3 months? Normally in a spring market, it would change as more homes come on the market during the summer. But our summer real estate market is going to be October, November, and I don't see a lot more homes coming on the market during that time of year. The only thing that can kind of even the market out a little bit is the buyer uncertainty, the negative news as we get into the election might make buyers back out a little bit. So again, you know, every market is different. Even within San Ramon or Danville or Dublin, Alamo, Blackhawk, and even streets are different. But if you want to get a better idea, again, no cost obligation to what your home is worth in today's market. You know, the one thing as we get closer to the election, we'll talk a little bit about, and once the election happens, because there's definitely, doesn't matter if you're Republican or Democrat, when I talk to you about what can possibly happen with the election, I'm going to talk to you from a fact base, not a political base, because there is a difference on how they feel about housing, mortgage deduction, and some you know, the advantages of owning a house. So we'll talk about that as we get closer. Right now, if you're a buyer, people go, well, Joe's a buyer, so the market's so hot, should I buy? I would be a buyer in this market, but I would be a smart buyer, you know, to make sure, because again, you know, the one good thing is the fact that there's some really nice homes coming on the market, and I think there's going to be more homes coming on the market because through this basically video and other videos, I mean, you know, sellers are realizing that, hey, if they had thoughts of selling, there's been no better time in ever to sell. As far as prices are as high as they've gone, we've more than made up the gain by, you know, tens and hundreds of thousands over the peak it was like in 2005, 2006. And we're even above where we were in February, the best February we had in 13 years. So the hope is the fact that, you know, the inventory goes up, more sellers go to put their home on the market. And unfortunately for California, that's going to be, you know, a lot of people moving out of the area, because the reason a lot of sellers aren't putting their home on the market because, you know, so I sell my home for $1 million. Now I've got to get into this bidding war, you know, going for $1.5 million. So if I was a buyer, I would be a buyer, but I would be a smart buyer. If you're thinking about selling, reach out and we can tell you realistically what your home would sell for, what and how long it would take to sell, and talk about just the overall picture of maybe what next year looks like if you decide now or next year. So reach out. Again, Joe Kehrig, managing broker of Coldwell Banker Real Estate in Danville. Cell number 925-487-6838 or joe.kehrig@cbrealty.com. Thanks for joining me this week, and can't wait to see you next week. And as always, may God bless you and God bless your family, and may God bless the USA. Talk to you soon. Thanks.